All right, guys. Happy Friday evening to everybody. I'd like to welcome everybody back into one of the original live streamers on YouTube. There's no doubt about it. This is one of the fastest 60 minutes on YouTube. Kickoff just a touch early. I'd like to welcome everybody. Hope everybody had a great Thanksgiving and happy holidays to everybody who's making their way in. Shout out to Tactical Maverick. He's making his way into the live stream for the first time. I'm not surprised, brother. He said he came across it on YouTube. I don't get any love on YouTube. Don't worry about it. No big deal. We're just looking to turn out results a lot like this right here. And we're looking to see how we can duplicate results like this for real people that are interested in taking control of their own financial future. It is absolutely possible. We strike at those opportunities to scale how any investor can enter into the stock market, no matter what your experience level, whether or not you're an advanced investor or whether or not you have zero experience whatsoever. There are absolutely avenues and opportunities for you in the market to get your feet wet, to get your start. Absolutely. But I think when we talk about those things on the back end, when we talk about accounts and we talk about product, whether it be single stock or ETF or index funds in the stock market, I think it's super important for people to understand that there is a hybrid way or a different way of thinking about money altogether. All right. And I want to leave you guys with this, and I want you to ponder this question. If somebody were to give you guys an $80,000 truck or 25 shares of Amazon, what honestly do you think the masses would choose, and what would you choose? So guys, welcome to the Independent Investor Channel live stream. I got a lot to jam into 60 minutes. So let's get started here and sit back and enjoy the ride. It's success stories like this, no doubt about it. And I don't want to claim any of that success. Rebecca's done all this on her own. I think the question is, did she accelerate her growth in a small degree or a large degree? Staring down $100,000 of net worth, blowing through some financial barriers. We talk about the idea of breaking down money in a way that gets people to not be pursuing those millions right off the bat, maybe pursuing your first 1,000 or 5,000 or 10,000. And I think when we approach money from a systematic perspective, I think we can really set people up to meet those short and medium term milestones. And those financial thresholds, as much as they are, it's just a round number. But I think those psychological wins in investing can provide you that validation that you can do it. If you are, in fact, interested in taking control of your own money, it's absolutely doable. And there's a lot of people in this group. I see a ton of channel creators, and I see a lot of subscribers that are making it happen for themselves in a lot of different ways. They're deploying a lot of different methods in the stock market, and those strategies and methods we talk about, okay? We try to take what is so confusing about the investing landscape, and we try to codify the opportunity through deploying strategy in the stock market by talking about some very, very simple, tried and true methods of seeking exposure, or in other words, putting capital to risk in the stock market. And that is the way I frame it. When you put capital to risk, you really do need to understand the question that I posed at the top of the live stream. I think the majority of people would opt for that $80,000 truck. And that $80,000 truck is 100% guaranteed to eventually down the line be worth zero. Okay. It is a depreciating asset, and it will depreciate over time. Now, Amazon, on the other hand, if you took $80,000 worth of Amazon and looked to deploy that, the idea is how much potential would that have going forward? It doesn't mean that the equity won't go down. Okay. And it doesn't mean that the $80,000 truck won't maintain some value over time. But I think the underlying lesson is to think about money in a different way, to try to think about how you deploy capital and how you can define different forms of money. I'm going to declare to you guys tonight, I did the year over year figures for you guys. I will declare those as one figure in the three larger accounts, about 340,000 in there. I'm going to give you guys the year over year performance. That shook out at 27% for the year, not too shabby. S&P returns are at about 14.5 right now. The M1 Finance passive, this one really caught my attention because this was a zero effort initiative on my part, a little bit hybrid for you guys that are somewhat new to investing. Please stick with this, okay? I don't want to be talking technical jargon with you guys and run you off, because I know there's a few people here who have admitted that this is their first time to my message. And my focus is on you, okay? I don't need to come on to YouTube and focus on me at all. My initiative and success through YouTube is going to be predicated upon the success stories, that of which I declared to you at the top of the stream, from Becca staring down a six-figure mark, and that is an awful big one. But the M1 Finance account was 22.77, so all 23% in the passive portfolio, not too shabby. So the strategic angle that we deployed in that M1 Finance account came in way of always funding the lowest sector in the S&P 500. That's comprised of all 11 sectors. I do just take a couple moments to explain. A sector is technology, discretionary, staples, energy, telecom, materials, real estate, and down the line, et cetera, et cetera. So I've basically taken and purchased 11 specialty ETFs. Those portfolios I make available to my subscriber base and anybody who clicks on any of my videos. They're all provided in the description. I provide full transparency. I am going to roll out the portfolio reviews as well, but just wanted to give you guys those figures up front. So 23%. To be honest with you guys, throughout the year, I don't focus on these figures. I don't. Okay, I don't. I do these around this time when things kind of settle down and I can take stock of what happened during the year. I did say this was my best financial year. There's no doubt about that in the least. This was a good one for me. It's just it's been a real Debbie Downer as far as everything else goes in 2020, and I'm kind of ready to move right on to 2021. But the aggressive growth portfolio, I hate to even call it aggressive growth because there's some value in there. I think Facebook is one of the best values out there right now, to be honest. But I do consider it in the growth category. It doesn't pay a dividend, nor do most of the holdings that I have, 11 total, in the aggressive growth portfolio. Google, Amazon, Tesla, slowly making me rich. I know some people are going to be like, yeah, Ryan, whatever, you sell out. I don't like Tesla. I don't. From a fundamental perspective, I don't like it. You know, that there's different schools of thought on Tesla, and there's plenty of reason not to buy the stock. It's just one of those things where I put a small position on and it's killing it. But that has contributed to a 41% rate of return for this year in the aggressive growth portfolio. Those portfolios that I roll out from M1 Finance, obviously both killing it, 23% and 41% respectively. Obviously, I did not want to jade the numbers and throw off my mean averages by throwing those into the other three, which was accurate when I took those percentages up almost $89,000 for this year. Crazy in those three accounts. I did not include my TSP in those figures. So for you guys that are part of the military and you do invest in the Thrift Savings Plan, what can I say? We're probably single digit anemic returns. I know the C fund just killed it in November. I get it, but I just don't understand how the Vanguard's S&P 500 can produce 4.5 basis points of alpha over the top of the C fund, which is the Thrift Savings Plan for all my military and government workers out there that contribute. That's really why I throttle that back. So what we're going to talk about tonight on the live stream is I'm going to give you guys the tidbits and the tips and tricks that I've used in 25 years of investing in the stock market and building wealth. I did mention last week, and I know we talked about it a little bit in my follow-up with Matt and Kyle on their product that they roll out right after I'm concluded, and it's a lot of fun. I kicked on there last week and told those guys happy Thanksgiving and congratulated them for their projects this year because they are also killing it. So if we've got all these folks out there killing it and doing their thing and just finding all this success, and I'm not going to self-induce myself in that category, but I'm quick to acknowledge the success of others. Absolutely. If you're new to the Independent Investor live stream, you're going to want to kick on and check those guys out. It's going to be a good investment of your time because social media has provided quite an opportunity for folks like myself and for Kyle and Matt and many, many others in the community. I've got Dave with Hidden Freedom Investing. These guys, I mean, they're self-made. And a few millionaires in the group. And I don't apologize for success on this. I expect it. And I expect it for anybody. If you're a new investor out there and you've always heard about the prospects of investing, I'm glad you made it to my channel because I think there's a lot of temptation out there. There's 300 right now on another live stream, probably triple that when the individual went live. But these folks are not your friend, okay? And they might be really, really nice, but the information that's coming through YouTube, for the most part, when you're talking about some of these highly speculative names, are really, really unfortunate. And it's unfortunate because it's misguiding a lot of people into jumping in over their heads. And so I would kind of like to take this opportunity, and I do have an ethical backbone. I really do. And so I'm going to take this few moments and on behalf of the channel and behalf of myself, apologize for a brief amount of time getting kind of caught up in the SPAC craze a little bit. And, it was nice to see those videos get 10, 15,000 views and whatever else. And that unfortunately really did grab a hold of some of my thesis for pushing out that information. Now, in my defense, I did own a position in the company. I still do. Okay. But here's the sheer reality of it. And I would be hard pressed to say that there's any other YouTubers out there that feel enough of an obligation to come on and say, you know what, I effed up. The trade didn't work out. Anybody who paid over $10 for warrants in Hyliion have got crushed. Came out on conversion day and dropped 20%. So I sold the warrants outright and didn't even convert it because my converted price was actually more than what the common shares were trading for. So, that's the sheer reality of it. That's how the math shook out. And I know there's people still out there that are still ripping through the stock. I own 1,200 shares. I'm a share owner from 3 days ago. Okay. I am still bullish on the company. There are absolutely still risk factors. We were striking a somewhat of a conversation earlier on before the stream about this particular name. But what that means for me is that I felt like for a brief moment, we pulled away from the intent of the channel. And I know there's some people who don't appreciate the coverage videos, the promo videos. That's too bad. If you don't like that, you don't have to consume that. But I get compensated very, very well for that product. And I'm going to continue to roll those out into 2021. That helps me keep the lights on. Okay. And it helps me keep the lights on, and it helps me keep some of the platforms afloat that I'm supporting and have incepted in 2020, specifically the independentinvestorgroup.com. If you're interested in kicking over there, we had 4 new entries to the Viper group just this week. We had Juan, Warren, Adam, and Shamsel enter the group and opt for the VIP service, man. What a great opportunity to sit across from somebody like myself with my experience and my lens, and my utter devotion and passion to trying to find that right alignment to what is right for you. Okay. I've got lots of tools in my tool bag, a lot of which I deploy in my own personal strategy. I share a lot of those with the group. I leave very little, if any, stone unturned. And most of the real-time stuff it does make its way into the WhatsApp group, which is our closed VIP group. There's 37 members strong. I don't know if we're going to have 137 next year. I don't know. But right now, we are running the special in there. It is 50% off. I have raised the price toward the end of 2020, and that price will remain consistent. It will not drop again, but the sales price will lock you in for life. Now, if you don't like the service, you can actually opt out of it, and no harm, no foul, and you can exit the group at any time that you want. But what it does do is it does lock you into that lower price, which I will never decrease the base price of entry for that. We're just providing too much value. It's just that simple. I have some masterminds in there. I'm not one of the masterminds. But my unique experience, coupled with the experience of a couple 28 years old, Kyle and Matt specifically, as well as a couple freaking geniuses in there as well. They don't talk very often, but they do monitor. And I think a lot of people can just benefit from the support that's rendered from the group. It's a lot more engaging. It's a lot more fun, and it keeps that awareness piece open and available to those who wish to consume their content in that way. And that was just one of many products that were incepted in 2020. The other being the Independent Investor Podcast. Very, very happy with that product. It should do good things in 2021. We're on to season 3. I roll those out in blocks of 10. I only drop 30-minute podcasts. Why? Because there's too much to freaking say. Okay. It's too much to say. It's too important to get to people who need help. And a lot of people out there have a willingness and a desire to get started on a wealth building program. I just don't think they know how to do it. And I think sometimes that willingness ends up leading them into places where they do end up in over their head. They end up trying to swing trade the market, or they try to get involved with some of these hot YouTube channels out there that are selling everything under the sun. You can 10x, 30x, 100x. I've already given my piece on that. And I think it's unfortunate, because the sheer reality is that, you know, there would have been no way for you to make a positive trade after all the risk reward in Hyliion specifically, and a lot of these SPACs, to be honest with you. They're very, very high risk, high reward, absolutely. But I would further question how many people are actually coming out of this unscathed. I'm sure that there's a few people that timed it correctly and they made a good trade on it. I was one of them. But and I was able to minimize my downside entry to the stock as well. I never paid over $26 for Hyliion stock per se, but the stock did run up to 58 and now it's at 18. There was some people that lost their ass. Okay. And so for that, I do feel somewhat partially responsible for providing that as an outlet on the channel. And going forward, that type of activity will be kept to a dull roar, if not provided through the Independent Investor channel. Because here's the thing. So many people can succeed at value investing. So many people can succeed at passive investing. So many people can layer up an existing program that they may have with an individual Roth or an individual traditional. Maybe even just look at the prospects of getting involved in self-directed investing for sheer reasons of wanting to take control of your own financial future. There's so much more that surrounds the discussion with regard to that opportunity for people, because the majority can succeed at that option. Okay. There will be a very, very minute minority that will actually get involved with this and actually succeed in the long term. Short term, yeah, we may produce some winners. That's fine. But we want to keep the focus where it's going to be the most productive for the masses out there that are just looking to get ahead and build some wealth for themselves. All right, guys. So it's portfolio review time, man. When I roll these out, if you guys do want to know specific holdings, share amounts, you can certainly tune into the portfolio reviews that I do. I do those more frequently now because I think it just is a great way for me to not only address the progress, speak to you about the function of the account and the holdings, and also to actually show progress. So this is a taxable broker just up over 100,000. This dipped just a little bit because of the contribution to the highly on stock gods after taking that loss. Now, this is one of the three that I declared to you guys at a 27% year over year. Now, those figures are taken from January until today, the time of filming this. So we have one more month to go. So I don't know how the year over year is going to be affected. If we have a dip in December, obviously that year over year is going to dip. And if we do end up having an end of the year rally, then of course that year over year figure of 27% will increase, and that's fine. But I figure you guys wouldn't mind me giving you guys an 11-month year over year performance from where we were last year. It's been on fire. I was just talking to somebody, I believe it was Kyle, offline this week, and I was telling him how I do remember hitting $250,000 of assets invested. But for the life of me, we're staring down $500,000 of assets within 2 years. And I cannot for the life of me disclose to you guys how we even got there. I don't remember. I really don't. And so when you start to meet these financial thresholds in your evolution as an investor, you're going to reach that first one, that 1,000 or 5,000 or that 10,000. And you might be the most proud of that because you just don't think that it can happen. But once you get to 25 and 50 and finally 100, which Rebecca has shared with the group that she's staring down next year, which is just fantastic, it really starts to accelerate. And I know some of these folks with some of these bigger portfolios can really attest to that. And I just don't know. I don't know how we got here. I really don't. And again, just like I said, as far as these numbers go, I don't really pay a whole lot of attention to it. I'm really focused in on my program, my strategy throughout the year. And then at the end of the year, when the dust settles, I'll go ahead and do an accounting of where we were last year and where we are this year. And we're doing what we need to do. And I'd feel hard pressed to sit across from an audience and declare myself as a self-directed investor that yields some success without the numbers to back it up. All right. Less words, more action. Yeah. All right. Very cool. Let's cruise on down here. This is the second of the 3 accounts that I'll go ahead and roll out. I give you guys the stock to cash position. You can see it at the start there, 87% in stock, and then about 15. I guess I didn't adjust that one. I do apologize. It's probably more about 13%. Matt and Kyle gave me some verbal lashing last week on not owning Microsoft and Apple. So I went ahead and entered back into the positions again. I looked at my strategic allocation to tech, and it was not good. So I picked up Apple at 116, picked up Microsoft as well, both at lower positions where I sold them about a month ago. But man alive, I sure do feel better owning those. My prospects for the stock are somewhat shaky. If this market does end up taking a hiccup, I think big tech is gonna suffer and be drawn down with the broader market. But hey, let's just hope I'm wrong on that. And they seem to think that I am. They really do. I don't know how much growth Apple has in front of it as a $2 trillion company, but it's done nothing but surprise investors. And the best thing that you could have ever done with Apple is just hold it and never sell it. So that's what we're working with there. I always disclose these for a few seconds, and then this is number 3. Now, keep in mind, this is out of about $340,000 of self-directed wealth that I'm declaring to you guys. One out of these is a taxable brokerage. The other 2, so about 225,000, is all tax protected, which is one of those aspects that I'm going to really foot stomp tonight when I'm declaring those avenues of success that I've rendered in the market. What are those tips and tricks that I try to relate with? And I'm going to give these to you guys in one word types of answers. So if you do have a scratch paper and a pad, I would jot these down and then go back and see if you can't explain it to yourself after sitting through the lesson on the live stream. All right. So that's it right there. And then this is the M1 that I talked about. This is the one that's at a 23% clip. This one does pay a small dividend. We're up 166 on dividends, and we're up $2,700 in capital appreciation. This hybrid portfolio has worked out better than I thought that it would. I think coupled with the power of taking my contributions to this portfolio and always flowing into the lowest funded holding, I think that really does help kind of counterbalance the portfolio, and it allows those dollars to really be maximized if they're always flowing into the lowest target allocation sector. I just think it's a cool way of investing. I'm sure there's schools of thought out there that would disagree with me on this. That's fine. I typically try to shy away from the whole, like, your method is wrong and my method's right type of thing. I tuned on to the live stream last Friday, and the first thing Matt said is, he said, "Tell me what I'm doing wrong." And he's known me a while, and I don't think like that. I don't. I've said this many times. You don't ever see piranhas eating each other, and I don't get into that back and forth like, hey, and there may be things that he or Kyle and maybe any other do that I disagree with, and I certainly am open to having those disagreements pointed back my way. But this just makes sense for me, okay? And this is the growth portfolio that I spoke about. You can see Tesla there. It's way overweight right now. I think it's at 16% of the portfolio. And I've asked it to maintain a 13% allocation. So it's just run up so fast. M1 can't keep track of it. Hell, it's a good problem to have, you know. Amazon, Google, Facebook, CRM, which took an unfortunate dip this week. I was surprised there. Adobe, Uber, Nvidia, Booking, Alibaba, and PayPal. That rounds out the 11 in the aggressive growth portfolio. So those are 2 brokers that I've got with 2 brokerage accounts with M1 Finance. So I'm glad to roll those out for you guys. I'd like to get into some of the comments and just kind of scour through and highlight some of the folks that have taken the time to make their way in here. I'm actually going to start at the bottom if I can. Christian says, the growth. Yeah. You know, there's going to be a lot of schools of thought. Honestly, if I was, 23 years old and I had this information, because I think a lot of people are tempted to say, well, hell, Ryan, why don't you just put $500,000 in the growth portfolio? You'll be retired in 2 or 3 years. Okay. Noted. Thank you. I appreciate the advice on how I should invest my money. I'm happy with investing that small of a scale in those growth names, and I'm happy having the bulk of my wealth in ETFs from a passive perspective, and the rest in some dividend growth with a small aspect of some speculation in the portfolio. But hey, it's money's money, and you're making 41% on any amount of money. We're doing something right. So I could just as easily keep this stuff to myself, and I don't. I come on to YouTube and I share that openly with a social media audience of significant size, and I think people appreciate that, because people misconstrue all the time. They may come on and be like, dang, this guy's working with $500,000. He must be doing something special. I beg to differ. I make up for a lot of my stock market deficiencies with ferocity, with discipline, with a desire to continually improve. These are all intangibles that if you can look in the mirror and say, I don't have, maybe you can work on some of those things moving into 2021. But to be self-critical and come on to a YouTube live stream, I would sit here and tell you that took courage to say I'm sorry and apologize for allowing 4 videos to be pushed through the Independent Investor channel, speaking about Hyliion. And I know each and every investor makes their own decisions, and that's fine. Did I have to come on and apologize? No, I didn't. But I wanted to get that off my chest. But the discipline and the perspective on the investing piece, in other words, what I just declared to you guys in the M1 finance account, right? In one word, growth, and the other was passive. Okay. So one took some knowledge on the stock picking side, the other took no knowledge at all to enact. Now, you might need a little bit of assistance and awareness on looking at my portfolio and say, wow, why did Ryan weight the portfolio to be heavy tech? Right? Why did he put materials at the bottom? And those are questions that if you're truly interested in learning, you should be able to drum up and generate no matter what your level of investing experience is, because I mean, it's not that difficult. I put those products out there. It's like starting at the end of the race and running backwards. Okay. And that way it's a lot easier for some people to look at and say, what are you strategically trying to do? And it allows you that opportunity to think about your dollars in different forms. This is some of the best lessons that I've rolled out on the Independent Investor channel, to really think about your forms of money and having those different forms of money in different assets buckets: the TSP, the aggressive growth, the sector portfolio, the brokerage portfolio, the dividend growth portfolio, the 2 tax advantaged accounts, the cash account. Each one of those have its own strategic benefit, and I usually try to keep them in a box so I can reach into that bucket whenever I need to exploit those specific benefits within each of those buckets. Okay, so super important there. All right, I'm going to cruise to the chop and highlight, man. I'd like to say happy holidays. I do have some plank owners in the group, and I always like to say, hey, it's great to see you. It's always great to see All Good pop in as well. I don't know. She's got just about as good as a track record as I have on attendance on the Independent Investor channel, and she has way more excuse than I do to not show up. It wouldn't make for a very interesting live stream if I, in fact, didn't show up for my own live stream. But I'm always interested what this guy's having to say, and I just want to thank All Good and many others here as well that continue to support the message and really try to support what I'm trying to build from a groundswell perspective. Okay. This channel and this initiative is all about empowering one investor at a time to realize their own PB, their own personal best. And if that own personal best means that you retire with $100,000 of capital, invested capital that you wouldn't have had before coming to the message, then I would render that a success. Okay. Very, very important. And All Good's just one of those as well. The greatest thumbnail on YouTube. I was telling him how amazing this is. It says preach. It's funny, man. I hope people see that I'm just a YouTube fella, just a regular fella doing YouTube. And I roll this out, and I want people to really understand that what I do out of sheer motivation to deploy. I have a little bit more motivation to do it than the average bear. Okay. And maybe some of that motivation can rub off on somebody to say, what does it really take to succeed in the market? What does it really take? Does it mean constantly picking the right stock and selling after 20 or 30 or 50%? And none of that is typically true. None of it, If you can really understand the fundamentals of money, understand why you invest, some of the specifics about explaining why a dividend is so important, why compounding is so important, why it is what I've explained to you through the M1 finance about buying low and then maybe selling high. And so for you guys that are talking about getting rich in here, there's no doubt that, stock market returns. This was my first 6-figure year. And that's great. I made more than I made at my day job, right? And to just put that into context, I probably had to put a significant amount of capital to risk to render that. So I don't put a whole lot of stock in, hey, I've got a huge portfolio. That's somehow something that I can duplicate every year. That's not true, because stock market may not be indicative to those types of gains next year, right? So it's safe to reflect on a good year, and it's great to take measure on where you are in accordance with the benchmarks at 14.5%. That's just what it is. So if you're trudging along at a 3% clip, you might want to reevaluate your program. I know Kyle's always talked about, hey, if I look at this metric and I'm failing to outperform, I'm putting all my money into passive investments. And I know where he's coming from. That I hardly doubt that he would do that, because he does understand the power of the numbers that I've declared. And I'm half passive myself, and I'm still able to, generate a 27% year over year rate of return on the market. So powerful stuff. But it just kind of goes to show what is possible in the market by just hearing the story of somebody who's just a regular fella who invests on his own, and that's how it shook out this year. So pretty awesome stuff. All right. I don't know what Golden Boy's talking about. Worth nothing later. He's probably talking about my truck analogy. Just a way of getting you guys to kind of think about the truck analogy is more socially acceptable. If you looked out my window right now, I've got a ton of military folks that get paid a nice, healthy $32,000 a year and have a hard time paying the rent in this building that I live in. But by God, they drive a $55,000, $60,000 jacked up truck with a phenomenal sound system. And eventually that stuff does rust out. Eventually it does decay, and eventually it does turn into dust. And it never ceases to amaze me the amount of social acceptance on being dumb with your money. But somehow stock market investing is looked at as a risky proposition. I beg to differ. And I think if you're new to the channel and you're hearing me talk for the first time, I think you can slowly gain some appreciation for how much I try not to buy into groupthink. As a matter of fact, you could probably live your life on this premise. Try to identify what the hell the herd is doing most of the time, and just walk the other way and do the damn opposite. I pride myself on that. I really do. All right. I highly encourage you to take that line of thinking. It's extremely empowering, and it'll make your life that much more enriching. You'll make mistakes, yeah, but you'll own it all. You'll have successes like that success that I just declared to you at the top of the live stream. That $100 and so thousand, that was 89,000 on the 3 big account. That's mine. I don't share that with anybody. I mean, I share it with my family. It's theirs. I don't care about the money. It's for them anyway. It's just one large step toward my financial goals down the line, and theirs specifically, because that in essence is my job as a man to provide for the family, and I'm doing that. And so at the end of the day, if we're rendering the results and we're progressing toward that end, then I'm happy. And that's typically why I don't really focus on it throughout the year, because we could go into a down year in 2021. We could very well have a market that's not conducive to market gains. Me personally, I think right now at the Dow, just over 30,000, I think the market, we are kind of in a quasi stage of profit taking potential. In other words, if you've got some investments out there that you're looking to take some profit off of the table, now is the time to do it, because there are 2 channels on the independent investor channel. There's version 1 of Ryan, and that you're getting that this evening. Okay. You're getting a kind of a throttled back first gear approach to stock market, not making a whole lot of moves in the market, making some strategic buys. I picked up Bristol Myers Squibb, which is my #1 bullish position in healthcare right now. I re-entered into CVS because from a price to earnings perspective at 12 times, we've got probably an implied value of around $80. I entered into the stock at 69. I'm already up huge in the position. Philip Morris, very bullish on Philip Morris. Altria Group, AT&T is starting to show some life. So just some of these strategic moves I do in fact declare to you guys, but that's version 1. Version 2 is where the real value on the independent investor channel is found. And that's when we're down to 18.2 and we've got a pandemic that has just gripped the global populace. And I come onto social media like a rock and I don't play into all the stock markets going to zero. I very calmly sit across from you like I am now and tell you that I'm buying. I'm buying. So I can go into the account and show you I was within 5 days of the March 23rd low. I was buying March 17th. So 6 days away, I was plussing up and I plussed up all the way down. So I had that capital on the side to deploy, and that's exactly what I did. And that's exactly what I will do again if it happens again. And I'm sure that there's a lot of schools of thought in the group that would agree with me on that. And I do contend, man, there is no emotion in investing. You don't want to play into those emotions. You don't want to say everything's hunky-dory now. I feel good about my program now. Therefore, I evaluate and justify the totality of my program based on the way I feel now. That doesn't work, okay? When the market's down 20% and we're entering into some bear market correction territory, that's what separates the investor from the pretender. That right there. So it's easy to be an investor now, guys. It's easy. If you trip and fall into the stupid stock market within a couple days investing in VOO, Jesus, you could be up a couple $100 and you're like, wow, this is freaking easy. Couple $100. Hell, I'd have to work an entire day to make $200. Just be careful about your perspective. Always respect the power of the stock market on both the upside potential and also the downside risk, okay? Always two sides to every coin, and good on me for being that one YouTuber that does explain, in fact, that the stock market goes two ways, up and down, okay? So we prepare either way. Very, very important. Cruise down here and try to highlight some of these cats that are in the group. Absolutely a congrats. And if you are meeting those milestones and you come in, and you're going to get a pat on the back from me, because I know how much those milestones can mean to people, especially those folks that just didn't think that they could make it. That's powerful stuff. Powerful stuff. And I'd love to speak with Rebecca more on how the portfolio looks, and you know, what are some of those key strategies that she deployed. I can tell you I screw up all the time because I can't keep my mitts off of my portfolio. And maybe she was just like, look, I invested and I kept it in there and I kept funding it. Sometimes that's the best move you can possibly make, Yeah, it's a lot of fun, but we do celebrate that success. Absolutely. And we expect it. We really do. Hot Dave, for sure. For sure. Yeah, thanks, Dave, and a big thank you. Yeah, hey, I love doing this, and if by nature of me loving doing this, people can find a little spark and exploit that spark and prove to themselves that maybe this stuff works. I don't know. I just declared to you some pretty big numbers. I'm a pretty humble guy. I freaking don't like to do that, to be honest with you. I never declare my YouTube earnings. There is a secret to finding out what I make on YouTube, and I do declare that. But I typically keep that to myself, because I don't want people to come on and be like, wow, this guy's kind of arrogant and pompous. But if people really knew where I come from and, how I started in hawk with the IRS twice, 7,500 the first time, hired an attorney to get me out of trouble. And then the second time at 5,500 for back taxes owed, on both fishing revenue and to claw myself back and enter into my current profession half depressed, and starting these accounts that I've declared to you, because the third one, remember, was incepted this year. Okay. But two of those accounts started with $1,500 and a $25 dollar cost average per month. When I first started, that's all I had. And these are the renderings that I'm declaring to you, both up over six figures. All three of them are. But the one I've manufactured about 50,000 of swing trading profit in there. It's been, yeah, I guess you could say killing it. Yeah. Yeah. Captain Ryan's doing fine for himself. And again, it makes me proud that I can come on here and calmly be an ambassador for this program and really foot stomp, not my success, but the fact that it can be scaled going forward. That's the key. So if you're sitting across from me and you're saying, Jesus, I want that too. Well, if you truly want it bad enough, you can have it. All right. Super important, man. That's Satan's financial advisor. I love the journey so much. I wish I could rewind time and learn all over again. We both know that's not possible, but I think this really comes full circle with me when I go back 2 or 3 years. Like tonight, yeah, okay, whatever. I was below $250,000 when I pulled last year's figures, or from this January, because I told you guys I only did 11 months. But to go back 1 year, it's like, okay, yeah, I it's changed obviously a lot, but try going back 2, 3, 5 years. I could go back 5 years ago and I would probably freaking faint. And I don't do that. To be honest with you guys, I don't do that. I don't go back and toot my own horn and be like, wow, I think I've declared over the last 3 years, we've tripled the accounts. That's true. That's true. These self-directed accounts, I remember plain as day, just 3 years ago, them being around 35,000 each. And here we go, It's good stuff. The stuff works, man. Wealth building. Okay. It's not gang, it's rich gang. Okay. And I know that's Matt, but I tell you, I was speaking with a friend of mine. Shout out to David as well. I hope you're feeling well. I know he popped in just to say hello tonight. I don't know if he's still in the group listening to me, but my West Coast connection said hello. But it's the network that I'm all about, to be honest with you. It really is. It's hearing about these success stories that really I get off on. I really do. But for some of the few relationships that I've come across, solidified really in the last couple of years, and especially into 2020, I wouldn't trade that for anything. I don't judge people on their subscriber base, and I certainly don't judge people based on their number, their financial security number, because that to me is just a number. And it can mean a lot of different things for a lot of people. For me, it's financial security for my family later on down the line. Okay. But certainly getting to know some of these cats has been a real treat for me in 2020. And I hope you guys do feel the same. So Damian C says, hi, Ryan. I appreciate you stopping by. Very cool. Really appreciate it. And all good always has love for Matt Money for sure. So a lot of channel creators in the group, guys. If you are making your way on and you're catching the live stream, you can obviously kick over and catch some of these guys. Retire with options. Mr. Randy, very good options traders. So really some very, very interesting minds here in deploying a whole lot of different strategies as well. GWETF channel. I remember Jerry when Jerry started. And I don't mean to sound condescending, but it's amazing how we all evolve and grab hold of this craft. And it's just been especially rewarding for me to sit back and kind of watch guys like Jerry create wealth for him and his family. That's freaking what it comes down to for me. It's what it comes down to. I hope I can drop a couple of nuggets in 60 minutes on a live stream to where I'm not wasting your guys' time, because that is the last thing I want to do. I really want to make sure that we're conveying a few nuggets every single week and providing and people think, man, 60 minutes, that's a long time, right? It's a drop in the bucket. It's a drop in the bucket to avoid the tragedy of ending up later on in your life without the financial security, especially if you end up in that place and it could have been avoided by nature of the choices that you've made over the course of your life. Yeah, you're going to get my best effort. And I do joke and I do have fun with this, but this is serious. This is serious shit. Serious. Okay. And if we can avoid that for 1 or 10 or 100 or thousands of people, by God, I'm going to keep trudging forward to make that shit happen. That's exactly what I'm going to do. And so you guys understand how passionate I am about this message, man, because this is avoidable. It's avoidable. Financial insecurity, instability, it's all avoidable. Why is it that the masses would opt for that $80,000 truck? It's because most people are stupid with their financial decisions. Stupid. I've been there, done that. I've trudged through the stupidity only to come through on the other side and see the light, if you believe in that kind of crap. Now, this stuff is really controllable, guys. It's not. Okay? You can deploy any amount of emotion. I did my due diligence on Hyliion. Sometimes it just doesn't work out. And that happens. You got to be tough. You got to understand why the hell you're doing this thing. And it'll make a heck of a lot more sense to you, but you got a lifetime to learn it. A lifetime. If there's ever any words of passing that I can provide to you guys, it's this. It's to start now, because the clock is ticking. Okay. And I do operate with a sense of urgency for that very reason. All right. Very cool stuff. I'm going to cruise down the list here, see if I can't cherry pick a few. Man, I got Larry Mass as a plank owner with the channel. For sure, my accounts are over 20%. Well, that's a successful bundle of acknowledgement that I'll make right there. You can't shake a stick at that. And, success. That's where it's at. Yeah, I like that, man. Those numbers are fantastic. I can't Thumper the God, melt that snow. Fantastic. I don't know if he's referring to me going to the bathroom. But anyway, got Minds in Motion, who's another Viper Group member as well. One of the many people that I've got to kind of know a little bit more this year. And I'm freaking glad to know. It's so cool, man. So many people coming from so many different walks of life, that of which I would have never had the opportunity to probably meet, And Murray's just one of those, part of the family here. And, as a contributor to this community, I charge Marie and everybody else in this group with wealth building for themselves. Why is that? It's because I want to evaluate how this project renders results in 5 years. Okay. Is the SPAC community rendering results? I don't know. I don't know. Maybe, yeah. Maybe everybody's getting rich. Maybe they're finding that niche of vein of opportunity and heavy speculation, and the majority are getting rich. I think me and you can come to an agreement that that's probably not the case. However, on the flip side of it, and the value investing side of it, house, wouldn't you rather engage on a program that it really does put the odds on your side? Okay. Something for you to really evaluate. And I can't answer that for you. All I can do is advocate for what I've done. And if these numbers don't get your attention, I don't know what the hell will. It's great to see you. Happy holidays to you and yours, Marie. Very cool. Great to see you. Cruising down. Was looking at a 5% week that got covered in an avalanche. Fantastic. I had a troller on the channel this week. I invited him on the live stream to argue with me and tell me how bad of an investor I am. It looks like they didn't take me up on my invitation. It was a personal invitation as well. I thought that would have been fun. I thought that would have been some Friday fun. All right. One of those other VIP members as well. Becky, it's just been an absolute pleasure to get to know you. Condolences for an extremely tough year for you. There's no doubt about it. We do talk investing here, but I do take it to the next level. And I've gotten to know a lot of people in this community, and you are one of them, and you are one of my absolute favorites. You're an absolute sweetheart of a person. Just keep being you, and keep being an advocate, because you, through your personal empowerment, are indirectly advocating for my message, and I'm in debt to you. Kelvin says, "What's up?" It's fantastic. You got about 7 minutes left on the stream. It's been a good one tonight. I'm happy with the message. There's some points here I'll have to turn out a 10-minute YouTube video on, because I didn't really get to some of my aspects, but you guys get the drift. We revolve around these because they're infinite topics. I really didn't get to the 3 lesson pieces during the live stream. That's totally fine. If I was going for 2 hours, I absolutely could, but I'm not going to step on my gents. Their live stream is actually increasing, and the progress on their live stream is noted. It's growing, just like an investment. I've grown this thing up I was one of the pioneers. I don't think anybody else was doing this, nor do I think there's a lot of people that are capable of doing what I do on a live stream. I tune into other live streams and they're full of shit. So I can't stand it and I turn it off. All right, super cool. He's groaning because he's bored. He says, "Arg, Ryan is a true fiduciary." Absolutely, absolutely. I do not buy into those designations. That's one of my most unfavorite words because I don't think it means squat. I don't think it means squat. I think there's such an agenda on the side of a fiduciary financial planner. They train you to sell, and that's what you do. So I question the very intent in the meeting of fiduciary starts to degrade and decay when you really start to take a hard look at the hard impact and the hard results on what is rendered from a program that is under the tutelage of a financial planner. Yeah. Again, self-directed investing. You guys be your own judge. Did the numbers that I declared to you guys, does that stuff work? And I'm sure Matt, I would ask Matt and Kyle as well. They're killing it this year as well. I guarantee they probably had better years than me. I don't know. I don't like to compare that way. But I'm sure they can run the quick numbers and declare that to you guys because they're kicking ass too. Whatever. I'm looking to the horizon. We're looking to get somewhere. And the quicker we can freaking get there, the better off we can be. All right. I'd like to get there while I still have a few marbles rolling around upstairs. That would be cool. And I know I'll get there. It's inevitable. It's just a question of when. That's simple. Yeah. Fiduciary. It means, do I have your all's best interest in mind? Yeah. Very simple. I sure do. If I thought that there was a right thing to say, the right thing to do, the right way to act, the right gesture to make, believe me, I would make that if I felt like in some form or fashion or degree, it helped your financial situation. I would absolutely do it. But I think I do that most of the time. Bob writes in the house. He's also one of our guys that has surpassed over that six-figure mark and staring it back down again. I had the same thing happen. Don't feel bad, Bob. He's tough. He'll get over it. He likes this investing gig for sure. Doing quite well. Mr. Chris is in the house, giving props to Lydia Santiago, who is a plank owner on the Independent Investor channel. There's no doubt. I told these guys that I probably owe them some equity stake in the company if I ever get big. No, I'm just kidding. The size of my message and the quality of this channel is predicated upon the backs of individual investors, and you are one of those. Thank you so much for coming in. I really appreciate you. I finally got Roku back. Good grief. Let it go, Lydia. Let it go. And Sarah's also a member of my Viper group as well. Happy holidays to you and yours, Sarah. Appreciate Ryan taking responsibility, having content that does not mislead people, but also think people need to take responsibility for their own decisions. Everyone wants to point fingers. Yeah, so I mean, I point fingers at myself because I'm quite certain there would be people who came on and said, man, Ryan has conviction about a particular stock. He's done due diligence, therefore I don't need to. And it's probably just as painful doing due diligence and having the stock turn south on you, but not for me, not really. I did everything I could possibly do on the position, and it's not my first rodeo. It's still salvaged. I still own 1,200 shares of the company and will continue to be an investor in the company. No harm, no foul. But that little piece of it, I do acknowledge that my message does have an impact on people. And I just wish to be a little bit more careful with what I put out, especially when my agenda is mixed between, getting a quick bump on the channel as opposed to not really recognizing what the real impact on the end viewer will be. And that's really been a lot of the basis of which the channel has been built upon. And I lost that for those few moments and very popular videos. I'm not going to do it again. Some could say that it's a sellout, and I won't do that. All right. Very cool. We're getting down to the nitty gritty. We've got less than a minute. Lydia, just know I am copying you on Visa and Roku. Fantastic. It's a good one to copy on. I entered back into Visa on the small dip. So we are an owner again as well. So with that, guys, I'm going to really try to wind it down Really wish I could go longer. I really do. This 60 minutes is appropriate for the YouTube investor live stream. Going into 2021, it's going to require some discipline. There's no doubt. We just went over 30,000 just a couple weeks ago, if not a week or so ago. Gonna have to be careful. Tread with care. Stay steadfast on your program as well. Continue to learn and evolve in that discipline and risk tolerance to the market. Remember, investing is not emotional at all. Okay. We want to make sure that we are succeeding in all facets of investing and not just expecting the market to always just go up all the time. Okay. But I do want to offer up the live stream again next week, Friday, 9 o'clock. That's our throwdown time. Want you guys to stick around, please, for the gents. They are going to throw down. I'll make my way in there in about 5 or 10 minutes, but I will offer an extended invite into the broadcast studio for anybody who wants to kick around with me. I will drop it in there now. There it is, the final invite. If you guys are interested in coming in, saying hello, dropping some questions to me in private, I will open that up for 5 or 10 minutes on the Independent Investor Channel live stream. So do want to thank you guys for your time, and we'll catch you next Friday. Be well. Have a great, great weekend, guys.